Good morning, good evening, welcome in. Wednesday stream here. Hope you guys are having a good morning so far. Just wanted to come on in here and give you guys a little update. Sorry for the later stream today, but I hope you guys are all looking forward to your trading session. I think yesterday, mainly the main overarching theme, as we have been talking about, after not clearing 5,300 was a initial shock sell-off as the 10-year yield started to rise. Now, why did the 10-year yield start to rise? And honestly, I think my execution this week has been absolute dog shit, right? But before I get into my execution, I want to talk about exactly why this is happening and what you should expect in the next couple of sessions here, because I think there's a little bit of a macro shift happening here. Excuse me. There's a little bit of a macro background shift happening here, where the market is starting to price in various pieces of data. The first piece of data that the market's starting to price in is the fact that there's not going to be that many rate cuts this year. The market's starting to realize that, which obviously we've been talking about this for months now at this point. At the beginning of this year, they were pricing in about 8 to 9 rate cuts, and I was very, very firmly opposed to this idea, because I kind of knew, based on past experiences, that the Fed wouldn't be able to cut the rates 8 or 9 times this year. It was just not in question. Now the expectation is for about 2 to 3 rate cuts, which is more in line, right, with what our expectations are, and that's fair, right? But the market's starting to price in a little bit of the fact that rates are going to be higher for longer, and at the same time, yesterday, or rather the past couple of weeks, we've been seeing strong economic data, a rally in commodities, right, which all makes the case for the Federal Reserve to cut rates even weaker, right? On top of that, there was better than expected job data with US job openings and factory good orders, which pretty much it means good news is bad news, right? So the good news is bad news theory is kind of picking up here. Now, purely based on price action, I executed like dog shit the past 1 to 2 days, and I'm obviously not feeling very good about it, but it doesn't stop me from getting into today's trading session and taking every single day brand new, right? I didn't manage to catch this down wave properly. I didn't manage to catch this other down wave properly, and then now that I'm here, obviously at this point it's making me uncertain whether I should be playing this short or not, right? These are such as the psychological barriers that you go through as a trader, and if you're in the same boat as me, then it's not uncommon to feel this way, right? So just based on trading the data, the right move in this spot right here for SPX is to do nothing. It's to do nothing until and unless you break firmly below 51.90, right? And if you break below 51.90, then you can scalp or day trade this into the next level down at 51.40-ish, right? But other than that, this can chop sideways for a little while, or it can rally back up to 52.20, where you can potentially get another short entry. So the right move to do here is not to play anything. The right move is to be patient and not let your mentality get to you. and don't let yourself be the biggest, problem between you and the market. On top of that, you have the NASDAQ here, which is still looking kind of weak. We spoke about NASDAQ and its breadth deproving. And if you guys realize, ever since this kind of rally here, sometime last month, we had already seen institutional money leave the system. You guys know this. I've covered this multiple times, that many times in the past month of February and March, we have seen institutional money leave the market. Okay, a lot of it has left the market. So now this may actually set up for a potential wave down, because there is no cushion anymore, right? And now the quarter just ended. We don't have any more rebalancing to do, right? People might be more into to take more profits. So, but once again, at the end of the day, the price action will have to speak for itself. And right now, I don't go short until we get a firm break below 51.90 on SPX. And I don't go long unless we can clear 52.50 and clear above 52.50, because other than that, any way from here is a rejection area, right? This is all rejection territory. And we could easily come back up here and then reject further down. So we need to wait for that price action to develop, and then when you get more conviction and more confidence, you can execute more freely, right? I did open up a XLE call position, I think about 3 days ago. This was after XLE broke out on the weekly levels, which it had not broken out since 2022 and then 2020, late 2022. So XLE is on its way up. Here's my trading journal for the week. I know, not very good execution, but I still managed to pretty good risk to reward, right? I've been keeping my risk pretty tight. I still have some trades that are not closed, which are going to result in further losses. So there's a very high chance that this week ends in a loss. But it doesn't mean that I'm not going to, do my own due diligence and try to claw back every last dollar that I fumbled this week, right? On top of that, you have a couple of trades that went right. We posted a snipe list this week in Discord, and that were PayPal, Meta, Apple, MS. And so far out of these, only Meta has actually been the mover. The rest are all kind of doing their own thing. And Amazon has been rallying a little bit, but selling off. Not really a good position trade so far. AMD has been trying to rally off this base that it's building here as well, not able to do so. NVDA is now breaking into a bearish pattern. If it continues rejecting 890, I would be potentially down to take some 850 puts. And then Tesla, with yesterday's delivery numbers that were very disappointing, has finally led it into 160, which was our ultimate target for adding long-term positions. For those of you that have not added Tesla to your long-term portfolio, this is a great spot, if you haven't yet, to buy a first tranche, right? 160 is fairly undervalued, right, based on cash flows. This is a good stock to add at this price if you believe in the EV sector and Tesla's rebound. I personally think this is a decent price to add your first tranche. If you haven't added it, if you have already added a first tranche, this is a good time to add a second tranche. But if you have not added a third tranche, this is not the right time to add a third tranche, because I think it can come down to 150 or so. So you might want to hold off on adding a third position just yet. Other than that, there's not really much else in terms of other setups that I really like. Someone was asking me about Sunrun, I think last week. Here's the reason why I didn't play that long position just yet. But I have bought shares in this just for the short term. Don't intend to hold them for very long. Boing was the other one. I told you guys there was a big buy up in positions and then a big sell off in positions, so this one didn't really run. Remember we spoke about FCX a couple of weeks back? Look at this thing, how much it's run since then. Crazy. Once it broke out from here, it pulled back to here. I managed to catch just a small piece of this. It ran up, it pulled back, and then after that it's gone kawabanga all the way to the upside. And I think it's not going to stop till it hits the $52 mark at some point in time in the future. So this one was one that was a nice setup that really played out well on the live stream, right? Meta moving completely opposite to the market here, which is pretty interesting, right? We had a long short position planned on this. Unfortunately, I didn't catch it. I fumbled all the great plays, and then I focused on trading SPX, and that's what really got me crapped out this week. So 10-year yield broke above 4.35-ish% and has been climbing. What does this mean? People are people are selling 10-year bonds, and in anticipation that the Fed is going to continue, keeping rates at a higher level for longer, which means that the Fed is not going to be buying bonds anytime soon, which means the Fed is not going to be doing quantitative easing anytime soon, right? Remember that money only gets into the system when the Fed buys bonds from the outside system, right? That's the only way the Fed gets money out. And so the market's pricing in the fact that, or rather bond market holders are pricing in the fact that they need higher yields in order to hold these bonds. And so you can see the yields are currently at around 4.4%. It looks like it could potentially get higher too, right? The dollar index, though, on the other hand, here you can see it got rejected, the 104.97 mark, and is making its way further down. So if and when the 10-year yield starts to calm down here a little bit, that will be a signal for a potential bounce on SPX. This is the reason why I'm not taking a short position here, because there is no guarantee that this will run further down, right? If the US 10-year yield pulls back a little bit and the dollar index is already starting to pull back, then SPX at some point of time will also bounce higher for a potential pullback. So this is the reason why I'm not inclined to take any long or short position right now. The NASDAQ, though, on the other hand, looks like a different story. It looks like it was in a uptrend, right? It was, and then it's now moving into a sideways kind of trend, right? And if it breaks below, then we need it to validate this level for continued wave down structure. As of right now, we don't have that yet. This could bounce here, go further up, do a double top, and then, or whatever top. This is a multiple top already at this point. And then reject here and then potentially come down, or it could just bounce and then go further higher, right? So no point to even try and guess what's going to happen here. I would just play it only when it breaks and confirms our hypothesis. So that's that. I don't have much else to talk about. Did Sunrun get dropped to the small cap index? I'm not really sure. No, I don't know. I don't really follow that news, but what I do know is just from the price action perspective, looks pretty decent for some shares. And the solar industry is one of the sectors that I really do like so far. If y'all have any questions, post them in the chat right now, and I will gladly answer them. As of right now, I don't have any intention to trade heavily today. If I see an opportunity for a scalp, I might take it. Other than that, nothing. I have VIX hedges still, which they're doing better than this past couple of weeks, so that's okay. But yeah, that's all I kind of have for you guys today. I hope that it was helpful to kind of pen everything out. And as I said, there's no edge in playing this range right now. Wait for a better opportunity, and then you'll get some good price action to trade with once either of these ranges break. Keep an eye on Rio Materials. I started shares position 62, short-term PT at 70. All right, I'll have a look. Thank you. Appreciate it, Rich. Well, all right then. That's all I have for you guys this morning. I hope you have a great trading day, or at least you start executing better than me, because my execution has been bad this week, but not terrible. It's just I think I'm a bit more harder on myself because I have a higher sense of, I guess, ego for these moments when I do stupid mistakes, and I have such high levels of acceptance for my own stupidity sometimes. But it doesn't mean that I don't strive to be better each day, and today is just like any other day. I will strive to be better, and I will strive to do better, and hopefully close out this week with some green. But yeah, I'll see you guys back on Monday for another live stream. If you can, leave a like before you go, and love you guys. Take care and peace out.